Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. We've got to talk about Robinhood and the fact that I think on paper they seem undervalued. I want to walk this explanation out because it is a strange phenomenon that happened to them last week. Now, this was brought to my attention via a Facebook group, and then I went through and obviously I had to go research this and look it up. So you can see here that for a brief moment last week, Robinhood had a market cap, which is the share price times all the shares, basically the value of the company, how much it is worth. They were worth less money than what they had in cash. So from this article that you guys can see, they were worth $5.99 billion, which means if you were to buy all of Robinhood, it would cost you $5.99 billion. Still a lot of money, but you get the point. When you look at their fundamentals, when you look at their balance sheet, they had $6.19 billion in cash, which doesn't really make sense, and it says a lot about the stock market. It says a little bit about Robinhood. But essentially, think about it. It's basically saying that, let's say that I as a person, that I have $5 to my name, but I'm worth $2. That those two things can't be true. I have $5, therefore I am worth $5 at the end of the day, but I'm valued at $2. That doesn't really make sense, which says you are quite literally undervalued. Okay, so that does not mean that Robinhood is necessarily a good company to buy or not, but it's just a strange case where I think, and I've said before, the market is overreacting in certain areas. So Robinhood, as of the time that I'm doing this recording, and I'm on vacation, but y'all still gonna get this content. I'm still teach like I said I would. But in either case, Robinhood is down 35% last 6 months and down 60% for the past year. It's not great. It's not great at all. However, this year to date, from the time I'm doing this recording, I'm doing this on the 18th of June, the NASDAQ, which comprises of pretty much all the tech stocks, the median stock is down 70%, twice as bad as what Robinhood is at the time of this recording. So yes, Robinhood is bad. It ain't as bad as everything else is out there. We talked about Peloton, we talked about Netflix, I talked about Intuit that was down 43% or whatever it was at that point in time. But it just shows you that sometimes it ain't you, right? If you picked Robinhood, not what I would have done, but if you did, I mean, this literally does not make sense. How can a company who has at least $6 billion in cash be worth less than the money that you have in the bank? That does not add up. Now, should you invest in Robinhood? Does it make sense to buy Robinhood, even if that is the case? Number one, by the time you watch this video, I don't know what Robinhood is going to be worth. Could be higher, could be lower. I have zero clue and insight into that. But the other thing is, they are a victim of a few things that I don't see really changing. Remember that one of the reasons Robinhood took off was because of the pandemic. Yes, they were famous for gamifying investing and making it more democratized and getting people into investing to a level that had not existed prior. Part of that was the pandemic. People were locked down and had to figure out what to do. And investing, the stimulus check and other things was one way they did that. Their user base of active people who are investing on the platform and in crypto has dropped precipitously. It has fallen off a cliff. That's their main user base. That's one of the big issues. The other issue is they have been losing money. Last year they lost $3 billion with the B. They're expected to lose $1.25 billion this year, which generally means that they are going to have to borrow to keep things going. Now, yes, they do have the $6 billion of cash. They could use that if they chose to, but usually companies want to hold on to the cash and borrow at a better rate. Except those rates are going up. So that is something that you want to consider. And if I am looking into Robinhood, I would be skittish because I don't know how investors are going to continue to react this year. It seems like all those meme stock traders that were on Robinhood aren't there anymore. All the people who are pumping and dumping a lot of these cryptocurrencies, they're not there anymore. And that is one of the ways that Robinhood had stayed in headlines and kept people investing and was making some bit of money from that. Now, there have also been some controversies as well. So this is not it's undervalued, go buy it, but it's just further proof rather, that the market is overreacting in some areas, and that sometimes you do want to pay attention to the fundamentals like this and see, in some cases, does this really make sense? For Robinhood, as of the time that we're doing this recording and the time that article is written, that don't make sense, man. There's no way that the market says that you should be worth less than the money you have in the bank. And these situations have occurred across the board in different spaces. We talked about this before, and it just sticks in my mind so much. When Netflix announced earnings, did it really need to drop 25%? No. Does that mean I should invest in Netflix? No, probably not, right? But those two things don't match up. We talked about Nvidia back in like February or so. Best quarter in 10 years. Did it really need to drop 6, 7, 8% or whatever it was a day? No, it didn't. But it did anyway, right? So sometimes, especially in a market like this where we're in a bear market, as the time is recording, perhaps we're not, maybe things went up. Who knows? But the key here is knowing that sometimes the market is not going to be fair. It's not going to evaluate you in the way that it should. And it also happens on the opposite side of things, where the market has taken off and there were some companies like, hey, I don't think you're worth 400% more. This happened with Tesla in 2020. I think it was 2020, where by the end of the year, Tesla was up like 400% during the pandemic. And we're like, are you really? Did I miss something? Did y'all make 400% more cars that year? The answer was no. But sometimes the market says, look, I think you're going to do amazing things, or I'm just overrating you because of whatever factors. And that is something that does occur. So the market doesn't always follow logic. Sometimes it overreacts to things like we've seen with Robinhood and others. But it's your job as an investor to sit down and say, what is really going on here? Is this something I believe in? And then why? The key reason is why I think Robinhood is down 60% in the last year. And part of the reason it's down 35% this year because they're losing users, active users. That is a big part of it. The crypto crash is another big part of it. The fact that they're still losing money. I think those are the main headline factors, which are probably going to keep me out of the stock. That's probably why that don't make sense to me, right? It's not something where users are still growing, money is still coming in, and the stock is down. Those are two different things. In the latter case, where I'm seeing an increase in users, or at least steady users coming in, and I'm seeing profits, and the stock is still down, I'm probably going to hold on to something like that. Whereas the opposite case, that's something I probably want to switch out of and get rid of. So just wanted to talk about that. It's not something that I remember coming across often at all, and just a strange case to show that the market is not fairly valuing a lot of companies, and it's your job to decipher which ones, and we talked about this before, which ones are like, hey, this is a discount. This is something I can buy now and wait things out, and that company over there, nah, I'm not going to touch that one. All right, so that's it for me today. One last thing before we go. Y'all know I'm on vacation, so I've taken the time, and it's hard to do, but to sit down and record everything for this week for more breaking news and content. You always know Twitter, Instagram, YouTube Shorts. That's why I'll be posting quick live things about just quick update of what's going on. We're also doing exclusive content for our members only. That tab is below. We did a breakdown on AbbVie, which is a really interesting company. We'll continue to do special content for those in the members only. If you want to join, hit the join now button. If you are in it, thank you. You tell me what to post. So y'all really get to drive the ship in terms of what deep dive things that we need and what's going to be the most helpful thing for you to become a better investor. All right, that's it for me. I'll talk to you later. Bye.